Hey guys, what's going on? It's Rekt Capital and welcome back to the Rekt Capital channel. Thank you so much for joining me in today's video where we're going to be talking about the death cross, the pre-death cross retracement periods across cycles, comparing them to the post-death cross retracement periods, and then trying to understand what those historical tendencies could mean for price going forward, because we've seen a new death cross happen for Bitcoin's price action. So understanding historical tendencies through the lens of death crosses and those retracements pre and post death cross, it's really important to try and understand what those tendencies and how they could impact future death crosses, this current one in particular. Without further ado, let's dive right into the video right after our quick sponsor. Our sponsor for today's episode is Syscoin, which is a layer 1 protocol that takes the best of Bitcoin and Ethereum to build a smart contract platform with better finality and decentralization while making the most of the strength of Bitcoin's proof of work. Syscoin is one of the very first blockchain platforms that will implement zero-knowledge rollups, ZK rollups in short, on a considerable scale. And what's good about ZK rollups is that this zero-knowledge math can allow data to become more compressed, which makes it cheaper to store the data while the contract can still validate this data, which in turn significantly increases transactions per second. The native token for Syscoin, SYS, is getting more and more accessible and recently got listed on notable exchanges like Huobi Global and KuCoin, and over the past few weeks, over 10 new partners have been onboarded, with a couple of significant parties such as Anchor Protocol and BNB Swap. And last but not least, it's worth mentioning that on June 9th, during the week of Consensus 2022, there will be a major announcement during the Syscoin ecosystem party where Hi-Rez, the rapper, will be performing, and Crypto Wendio will be interviewing the lead developer of Syscoin on their layer 1 protocol, Jag Segu. Feel free to learn more about Syscoin in the links in the description down below. Awesome, so let's have a look here at previous death crosses. This is a golden cross where the 50-day EMA moving average crosses over the 200-day EMA, and this is essentially a shorter moving average crossing over a longer term moving average, this 200-day moving average being a good long-term gauge of investor sentiment. So crossing over above it is a golden cross, precedes macro uptrends, and a death cross right over here is what precedes macro downtrends. And if we look about across cycles, minus 73% is the downside we see over the time, over a period of 135 days until we see that first death cross happen. And this is in 2014, late 2013. And what's interesting is that once we see that death cross happen, we see another 70% retracement occur. So pre-death cross, we see 70% or at least 73% retracement. And after the death cross, we see a similar amount of corrective price action on Bitcoin. That's in 2014, the bear market. Here in 2017, we see a 70% retracement inside 110 days. Once we get that death cross, we see a further 65% decline in price action. So pre-death cross, 70%, and post-death cross, an extra 65%. So that's quite interesting. Already we're seeing some similarities here. Pre-death cross and post-death cross retracements are very similar. But at the same time, they're similar, but they are a little bit different. In this case, minus 70 and minus 65, that's a 5% difference. Here in the previous cycle of 2013, 73% pre-death cross and minus 71% pre-death cross. So a 2% difference. Let's move on to future cycles, or at least the 2019 cycle, pre-death cross, minus 53%. Inside 150 days, we see a retracement of, afterwards, we see a retracement of minus 55%. So you can see that this minus 53% pre-death cross and then post-death cross minus 55%, 2% difference, but nonetheless very similar. So that's a very important tendency to talk about in just a moment, where pre and post death cross retracements are approximately equal, but they do differ by a few percentage points. So we'll be talking about that in the future part of this video. In any case, we see a lot of meaningless death crosses and golden crosses in 2019. And this is what happens during macro accumulation phases. But if we move on to 2021, we're actually seeing the peak occur in May 2021, minus 55% retracement inside 69 days. So this is a very important thing. We're seeing stronger retracements, or at least historically relevant retracements, which are quite similar, 65%, 70, 55%. But we're seeing this occur in a much shorter time period. Before we saw retracements before the death cross inside 150 days, 107 days, and even before then 133 days. A very stark contrast to what we're seeing with the 69 days. So a retracement is occurring much quicker, 55%. And once we see a death cross, we actually mark out the bottom. So we see a plus 141% rally towards the upside. So this is where we see an invalidation of pre and post death cross retracements being similar. This is an invalidation of this historical tendency. But if we look at this period, November 2021 topping out, once again, 63 days until the death cross happens. So once again, we're seeing a shortening in the time that it takes for a death cross to occur compared to previous cycles. And we're seeing a 42% downside until this death cross happens. But we're seeing a return to form whereby we've seen post-death cross an extra minus 35% retracement. So while the 2021 period was a deviation from death cross form and historical tendencies, where the death cross actually preceded a bottom and upside, in this current period, we're actually seeing a return to form where death crosses actually proceed further downside. And we're seeing a very similar downside already occur, minus 36% versus the pre-death cross 42%. But of course, we could see a similar death cross happen. Of course, in the past, we haven't seen these numbers be extremely, or at least not the same, apologies. They aren't the same, they are similar. But let's say they are similar exactly. A 42% retracement after the death cross would lead us to a price point of 22,700. And this is a quick summary. In 2013, you can see that pre-death cross 73, post-death cross 70. Here, pre-death cross 70, post 65, pre 53, 55 post, and here we see that deviation. And then in 2021 we see a deviation once again, but we're seeing a return to form right now. So this is a brief summary of that history of death crosses. If we were to see a post-death cross of minus 55%, then we could see a return to minus or at least $17,000. But the thing about these similarities is that they are 5% apart, 2% apart, 3% apart, and if we see 2 to 3% apart, so maybe we could see minus 45, maybe minus 46, 7, or even to the other end, the other side, where we see minus 38 or minus 40, in which case this could be close to a bottom, but history suggests we could see some further downside. And even if we were to repeat a minus 65% post-death cross retracement, that could see us return to 13,900, and 70% would actually see us return to 11,500, which would be a minus 84.5% correction, which is the average bear market correction across cycles. So that's quite interesting. But these are generally the post-death cross retracement periods that we've seen in the past. These deeper levels, deeper retracements are less likely, of course, given how we saw these deeper retracements earlier on in Bitcoin's price history. We shouldn't, or at least we can't really say that this is a guarantee that we're going to see minus 70%, because that would happen in the 2013 cycle. We're in the 2022 cycle, almost 10 years ahead. Could we really see such a volatile retracement of 70%. It seems unlikely, and probabilistically it is less likely than the 55 or minus 42% retracement, which I feel could be a little bit more likely than the deeper retracements. But it's all about watching out for the $22,000 region of the 42% retracement, because this is a 42 pre-death cross retracement, and we will see a likely similarity post-death cross in the retracement. So 22,700 is a minus 42% post-death cross retracement, and that aligns well with the 200-week moving average. And as we can see, we see bottoming out at this moving average, and I actually have covered a thread where downside wicking below the moving average is where we see the maximum peak financial opportunity, and at the same time peak and maximum pessimism and extreme fear. So this downside wicking could take place below the 200 MA. The 200 MA would signify a minus 42% retracement post-death cross, but if we see some deep wicking, then we could see wicking into 17,000. for a total minus 55% retracement. So really interesting stuff. I hope you enjoyed this video. Subscribe to the channel if you enjoyed this one, and of course check out the links in the description down below to learn a bit more about the sponsor for today's video, Syscoin. That's about it. Feel free to like the video as well. I'm Rekt Capital. Thanks so much for joining me in today's video, and I'll speak to you in the next one. Speak to you soon.